To find the powerful order block, you need to know this secret. In this video, I will teach you two simple models that will help you to identify a bullish and a bearish order block on any forex pair in a second. Like this video, subscribe to my YouTube channel and learn the essential smart money concepts basics. The only thing that you should learn in order to identify strong order blocks is a basic structure mapping. To find a bullish order block, you will need to understand a classic bullish trend model. Please examine that simple model. What is so specific about that is that the price consistently updates new higher highs and higher lows. Such a model can be used to confirm that the market is trading in a bullish trend. Once you identified such a price behavior on any forex pair, this model will help you to identify a powerful bullish order block. And before I show you where is that exactly, let me share with you a definition of a bullish order block. Bullish order block is a significant price zone or level where big market players, banks, institutions, hedge funds have previously placed a high volume of buy orders, creating a strong imbalance in demand. And what is the proof of this strong demand in our model? In a bullish trend, a bullish violation of a current high, a break of that structure is a very important event. It will signify a strong buying interest, and the violation of a current high will signify a strong bullish imbalance. And the initial point, the starting point of that movement will be your order block. In that model, it will be the last higher low in a bullish trend. That will be your bullish order block, and that will be the area that you should pay close attention to. When the price tests that in future, from that zone you can look for buying the market. It can provide a very safe zone to buy the market from. Learn smart money concepts and advanced strategies with my SMC book. Look inside the book on my website, the link in the description below. The book is also available on Amazon. Also remember that if the market continues trading in a bullish trend and if the price updates a new higher low and a new higher high, our order block zone will shift. It will be based on the last higher low, and the previous zone will be invalidated. Let's study a real example and let me show you how to use this model in practice. Please study a price action on New Zealand dollar forex pair on a daily time frame. You can see that we have a perfect bullish model right here, and you can see that over time the price updates higher highs and higher lows. A recent break of structure and the formation of a new higher high signifies a strong bullish imbalance, and the last higher low gives you a very perfect point for an order block. It is the exact point where smart money were placing their buying orders, and for that exact reason the pair bounced so strongly. In order to do that zone properly, remember that the low of your bullish order block zone will be the low of the last higher low, while the high of your bullish order block zone will be the lowest daily candle close among recent historic candles. In our example, our upper boundary of that zone will be right here, and our bullish order block zone will be that area. In future, we will pay close attention to that zone, and we will assume that buyers will keep placing buying orders within that zone. Once that zone is reached, we will expect a strong bullish movement from that. Alternatively, a bearish violation of that zone will be a very significant event that will signify a change of sentiment and a highly probable bearish continuation. To find a bearish order block, you will need to understand a classic bearish trend model. That is our simple bearish model. What is so specific about that is that the market tends to update lower lows and lower highs in that consistently. Such a model can be applied to confirm that the market is trading in a bearish trend. Once you identified such a price behavior on any forex pair, you can use that model to identify a strong bearish order block. Bearish order block is a significant price level or the zone where large players, the smart money, have previously placed a high volume of sell orders, creating a strong imbalance in supply. And what is the proof of the strong supply? A violation of a current low and a break of that structure will be a very important event. It will signify the dominance of the sellers and a very strong bearish pressure. The last lower low in a bearish trend is a strong demand zone, and in order to violate that, we will need the excess of the market supply. The initial point of that bearish wave will be a critical zone where smart money were accumulating their selling orders. It will be our last lower high, and that is going to be your strong bearish order block. We will assume that in future that zone will be important for the market participants, and selling orders will keep being accumulated within that. For that reason, you can look for selling the market from that zone in future. Important thing to note about that model is that if the market continues trading in a bearish trend, and if the market updates a new lower high and lower low, our order block zone will change. It should always be based on the last lower high, and the previous zone will be invalidated simultaneously. Let's study the example. Please examine a price action on New Zealand Swiss Forex pair on a daily time frame. We have a very bearish price model, and with the sequence of new lower highs and lower lows, we can see that the market is trading in a bearish trend. In order to identify a bearish order block, we will need to identify the last lower high in this bearish trend. Your order block zone will be based on that lower high. To correctly draw your bearish order block zone, the upper boundary of your bearish order block zone will be the high of the last lower high, and a lower boundary of that zone will be the recent highest daily candle close. Here it goes, and here is going to be your bearish order block zone. We will assume that the sellers will accumulate their selling orders within that zone, and once it is tested, a strong bearish movement is going to initiate from that. Alternatively, its bullish violation and its breakout will signify a change of the market sentiment and a start of a new bullish trend. That is why that zone is so significant. Remember that these bullish and bearish models will work on any time frame. However, higher time frames order blocks will be always more significant than lower time frames order blocks. Following the rules that we discussed earlier, we can easily find a bearish order block zone on a pound-dollar pair in a 4-hour time frame. We will draw that zone following exactly the same principles. And of course, you can find such zones on minutes, even seconds time frames. Of course, these two models will not reveal all the order blocks on the price chart, but it will show you the most significant ones that you can use for safe entries for your trades. Let me know, traders, in the comment section, what else do you want to learn in smart money concepts? Also, traders, learn SMC from scratch with my book. For more info, check the link in the description below. It is also available on Amazon. Also, traders, please watch my other videos.